The Financial Survival Network, helping you survive and thrive in the new economy. For a free financial survival toolkit and newsletter, sign up at kerrylutz.com, KERRYLUTZ.com.
1490 WGCH, this is Kerry Lutz, and you're listening to the Financial Survival Network. My next guest, Barry Stuppler, owner of Stuppler & Company, MintStateGold.com, well-known, long-standing numismatic and bullion dealer in California. Barry, thanks for being with us.
My pleasure, Kerry. It's always fun to be on your show.
Hey, well, it's great to have you because you have such an encyclopedic knowledge of the markets. And when I talked to you the first time in July 25th, gold was at 1620. Now gold's at 1651. It's kind of been a dead market, huh?
Funny. we've had a lot of volatility here, Kerry. I mean, you saw gold up to 1920 back in September, and then a correction back to 1515. I mean, we're seeing a lot of volatility in these markets. It's exciting times. I I talk to gold and silver investors all the time, and their heads are spinning. So, should I buy it? Should I sell it? This? It's just an interesting time to watch because we're seeing this increased volatility caused by what's happening in Europe, what's happening in Asia, what's happening with our own domestic markets, and it's scary. It really is scary out there.
Yeah, and it doesn't look like there's any cure. There's nobody that's willing to admit to the scope of the problem, certainly not your government elected officials. They're all in denial, or they're just lying outright. The Federal Reserve, I don't know where they're coming from. They're just trying to keep a lid on things and praying that, I think Bernanke's praying that he can retire and hand this off to somebody else like Greenspan did to him. Where's it all heading?
I think that you're going to see a substantial influx of quantitative easing. Both you're seeing it right now. The Bank of England announced today that they're going to be doing substantial quantitative easing to bail out the banks, to do what they call a bank recapitalization. I love that phrase, a bank recapitalization. I think that just has a lot of ring to it. And the Europeans, the same thing. They're doing the same thing over there. These banks hold substantial debt, the Greek debt, the Italy debt. I mean, all the big countries have substantial amount of debts, and the banks are holding them. And if they allow them to default right now, these banks would be basically insolvent, and they'd have to be forced to close up, or they'd be nationalized. So you have an issue going on, and the only way out is this quantitative easing. Just produce a lot of paper, fiat currency, get it out there, so that everybody looks good, and then we end up having inflation, and in some countries we'll probably have hyperinflation.
Yeah, close your eyes, hope for the best, right?
Yeah, well, the good news is I've got a job and I'm making $1 million a day. The bad news is a gallon of milk cost me $1,000. That's the bad news.
That's that old story. I even remember that old joke from the 70s. Guy gets frozen, and he comes back like 100 years later. They defrost him. He calls up his broker on the phone and says, "Hey, this is me. I just got out of cryogenically induced sleep. How's my account?" And they said, "Oh, you did great. You got $100 million in that account." And he's like, "Wow, that's amazing." Then the operator gets on and says, "Sir, the phone call cost $250 million. Please deposit the coin now." And that's kind of where we're heading, you know. It's the unit of measure.
It's the only way out, Kerry. I mean, really, you have to be able to inflate the debt problems that we have with China holding our debt. I mean, only way we can depreciate that is just to make the dollars worth less, and we're seeing that. I mean, these budget deficits now are $1.8 trillion. I don't know when they get it right. I mean, so it's ridiculous. I mean, you're seeing all this, and that's why you're seeing gold so popular globally now. I mean, a couple of years ago, people didn't want to own gold. 3-4 years ago, now most of the financial planners I talk to, the accountants I talk to, the money manager I talk to, make gold a portion. I mean, anywhere from 15 to 30% of their holdings, because they know that the currency is being devalued. They know they have to have protection for their clients, and it's scary.
Yeah, and you really have no choice. If you want to conserve and preserve your wealth, not even talking about growing your wealth, just conserving it, you got to have a meaningful portion in precious metals as an insurance policy. Now, you've been in this business a long time, Barry. How does this differ from going back to the 70s when the whole inflation scare and gold going parabolic and silver? Is this different this time?
Yeah, it is different because it's global. I mean, if you look at what happened back in the 1970s, we had whip inflation. Now we were concerned about double-digit inflation. Speaking of that, there's a new program. I actually sent out the article to a lot of clients. It's called Generate Inflation now, and Bernanke and King, and it's called GIN, G-I-N, and GIN, right? And it's Generate Inflation now because they want to see some inflation come back into the system to stimulate the economy. And it's absolutely the opposite of what happened back, obviously, in the 1980s. Mm-hmm. Right now, you're seeing a global issue. You're seeing issues of such a massive debt globally, not just in the United States or in Europe, but it's all around the world right now. These substantial debt issues, and these banks that are holding debt on insolvent or countries that obviously can't pay the debt, so they're just pushing it out. They're pushing the cart down the road, so to speak. But it's different now. It's global. It isn't an issue of whether gold is a bubble. It's that when will the dollar bubble break? That's the concern. I gave an interview to CNN back in January of last year, and they were talking about the article I wrote in 2008 about gold 2011 by 2011, and she was talking a lot about how isn't gold a bubble. I said, is this similar to what happened, with other bubbles that have burst, like the internet stocks and whatever? I said, you can't compare this to the internet stocks. You can't. You got to look at it for what it is. It's a problem with currencies. If we had a stable currency, gold would be trading at $50 or $60 an ounce. But that's not what we've got. We've got problems, and people are running to gold as the ultimate safe haven because right now it used to be the Swiss franc or gold. Now the Swiss franc has taken itself out of the picture by linking itself to the euro. Now the only option you have is gold. And my clients are increasing their holdings substantially. I mean, I have guys that just keep on adding every so often. They add another 50 ounces or another 100 ounces of gold. They just want to know they've got some protection. So it's not the same. People are buying gold for wealth preservation, not for a speculation anymore. It's not a speculation. It's just a way to preserve their wealth.
And that brings us to the next point. I don't dwell on it much because I feel like price will tell you everything you need to know, but supply. You're a dealer. What's the supply of gold like? What's the supply of silver like? For me, it's ample because I have relationships with clients around the world, and I don't have a problem with accessing supply. There are times where the mint, for example, the mint sold, I think it was over 4. I saw that.
Yeah, well, they're on a record pace. If you look at what the Mint's doing now in terms of sales, they sold about 4.5 million Silver Eagles last month. And the amazing thing about that's during a month when the silver dropped 30%. Now, normally in a month where silver drops 30%, the investors are going to panic out. They're not going to buy silver. They're going to be selling because they're scared. Now, we're not getting the panicking. We're getting people that have been experienced over the last 10 years that see that this is a bull market. And they say, well, this is an opportunity. And they step in, and all of a sudden, the Mint sells 4.5 million Silver Eagles in the month of September, which is normally a very quiet month. And they're on record pace to sell over 34 million, probably 36 or 37 million Eagles this year. That just tells you, as an indicator, that there's demand. And the Mint's producing them out of San Francisco now because they can't keep up with the production out of their eastern mints. So
really,
it's just we're seeing it happen.
That's pretty incredible. And you think that every eagle that they create, that they mint, is basically an ounce of silver taken out of circulation and put in a vault someplace, right? It's never. It'll be sold at some point, but I don't see anybody that I know who is a precious metals investor selling their metal under any circumstances, whether it hits 10 or it goes up to 1,000 an ounce for silver. They're not selling, and I don't see any rush to sell any of the metals. And you think, hey, you see where silver loses 40% in a very short period of time, you'd think people would be looking to dump it, and yet, as you stated, the Mint, there's a run on silver, literally.
Yeah, you were asking how this compares to 1980. In 1980, I had a retail coin shop on Ventura Boulevard, which is a very big street in the LA area. And I had people lined up at my door. I mean, we opened the door at like 9 o'clock, and from 7 o'clock in the morning, people were lined up, particularly as gold started getting towards that $800 range and silver started getting towards that $40 or $50 range. They were lined up to sell their silver. I don't see that now.
Yeah.
People are saying, gee, now all of a sudden they value this as a better store of value. They want to buy it. So things have changed. The mindset of the American public, as well as the global investor, has changed, and they're now looking to own precious metals as opposed to selling it because they get a great price.
And that's the next aspect of demand I wanted to talk to you about. Are individuals turning to this market now? Is it the traders? And I don't consider myself a professional by any stretch. I just feel like I got there early to the party. But the professionals have been driving this market, and the central banks and the large investors. Do we see in the United States now the small guy coming back, buying a couple of Krugerrands, buying 10, 20 ounces of silver on a regular pattern purchase?
Yeah, the physical guys are doing that. Yeah, the guys that make sense are the guys that come in and buy the 3 Maple Leafs and the 3 whatever on a routine basis so that they're acquiring it in physical. The guys that get hurt are the small investor that hops into the commodity market or hops into the option market and or the futures market, because when that market dropped. I mean, there was a comment that came out of the CME, which is the major exchange, that when the market dropped last month, and we saw in one day we saw about an 8% or 10% move just in the one day. That all the margin calls went out. All the weak hands were shaken. But the term is weak hands. The small investor got shaken out of the market. The professionals were over margin. They didn't have to worry about it. They had posted T-bills, or they were over margin. They didn't have a problem. They're in the market. When you shake out these small investors that are speculating, they should be thinking about buying it, holding it, putting it in their safe deposit box, but they want to speculate, and they're the ones that get hurt. Those are the ones that, when you have this type of volatility, those are the type of people that get hurt because they're not capable of reacting to those margin calls as quickly as they need to do it. But when you talk about professionals, there's various degrees. There's the hedge houses, there's the professionals, the multi-nation banks, and then there's the guys who actually work the floor, who actually trade on the physical floor on the CME. And these guys are trend players. The guys that work the floor, they'll play a trend. If the market is strong, or they see the general trend up, they'll be on the long side of the market. They always try to end the day what they call flat, or with no position whatsoever. But they'll short if they think the market's looking weak. They'll short the market, but it's relatively short. We're talking about they'll get in and out of this market in a matter of minutes and sometimes hours, but no more than a day. Now, those are the guys that have a better read for the day-to-day action, not necessarily the longer-term picture or the fundamentals changing or anything like that. They're trading as a professional in the market. Now, the hedge houses are smart. They're taking it as part of their overall position. They're taking it, and some of the banks are representing large clients, and they hold it and they speculate. They short it based upon what they see coming on down the line, and then they go long to cover. So it's an interesting degree of professionalism in the market. And then there's people like myself that make a market in it. No, do I establish the market? No, I make a market. If the market is this, I buy at this price, sell at that price, and I'll buy quantity or sell quantity. But can I affect the market? Not unless I make $20 million, $50 million, $100 million order.
Yeah.
I doubt if I could affect the market.
Yeah, it's interesting that you say that, because I got an email recently from a lady. She wants to start buying metals, which I thought was a good idea. She's doesn't have a lot of money, and she's in a position probably could buy a few $1,000s worth every month. What do you tell a person like Wanda? How does she do this to not get whipsawed and to just be smart about it?
Well, just find an item that you're comfortable with, whether it be, you can't obviously, with gold at $1,650 an ounce, you're not going to buy a lot for $2,000. There's also sales tax issues in some states. For example, in California, it's any trade under $1,500 is sales taxable. Anything over $1,500 is sales tax exempt. So I tell people, particularly in California, to spend at least $1,501. You don't want to spend less than that, because you're going to get hit in California for almost 9% sales tax. Other states have other sales tax issues also. But you can buy intrastate. You have to pay the shipping, and you wouldn't necessarily have to pay sales tax. But That may change if you watch what Amazon's
Yeah.
doing. That could change. But at the present time, just do it an accumulation program. Develop a relationship with a dealer that you trust, and just send him a check every so often, and say, look, this is just to keep adding to my position. And there are accumulation plans out there, but they're very costly, where you can actually have the money deducted out of your checking account every month at a certain amount. But they tend to be more costly because of the operational fees and the overhead to do that.
Right. So, but just get into the market. Find something you're comfortable with. Find a dealer you trust. Right.
Yes. Yeah, there are ways to find credible dealers. There's the Professional Numismatic Guild in California. Here we have the California Coin and Bullion Merchants Association, which I happen to be president of. So occasionally I'll get a person up in Northern California that wants to physically go into a coin shop and see and touch and feel, and I'll give them a recommendation in Northern California or something like that. But on the national basis, there's the Professional Numismatic Guild, P&G dealers. You can go on there and find a very credible dealer. These dealers have been around for years. The problem is right now with all the non-credible dealers, all the unethical dealers that are setting up in shopping malls around the country that are promising things that they can never deliver.
Right.
I mean, whether it be coins at half spot or we'll sell it to you at spot if you let us hold it for you for 6 months, or you take delayed delivery, or all types of problems that I've heard. A lot of these I get reported to me because I'm still active in the coin and precious metal field, being president of the Coin Dealers Association. And I'll have somebody call me and ask me, is it standard practice for somebody to hold your gold for 6 months to a year? No.
Jeez.
Well, I can get a good price if they hold my gold. I said, yeah, that's good, but they may not be there 6 months to a year.
Yeah, probably won't. So caveat emptor.
Yeah, take delivery.
Yeah.
You can check out individuals. The web is the greatest tool in the world to check out the credibility of a professional, particularly in the gold and silver business. You have the internet, do a Google search, look at their websites, see if they're credible, see if they have references, see if they've been around, see if their prices are fair. They don't have to be super fair, but just fair, reasonable. You have to allow them to make a fair profit. But you've got so many wonderful tools now to check to see if you have a credible dealer.
Oh, yeah. Really, the internet's the great equalizer. Whether you're buying anything, a car or a suit or anything else, it always pays to look there, check out your merchant, and make sure that they're credible. We know you're credible. You've been in it forever. And everyone only has good things to say. Well, it seems like forever. When you've been through a couple of these cycles, you start feeling like you've seen it all, right?
Yeah, you do. I mean, we just sent out a recommendation to our clients to switch out of gold into platinum, because platinum's trading at roughly about 9% less than the spot price of gold, and it's 30 to 40 times scarcer. And I remember doing that back in 1972. I remember doing that back in 1998. I mean, it's only been about 2 or 3 times when you've seen platinum actually trade at less than the spot price of gold. So I have clients that bought gold from me, and then now all of a sudden they're trading into platinum, and then if it gets to a point where platinum gets to a healthy premium, we'll have them switch back into gold. So the history and knowing that this has only happened 2 or 3 times, at least in my 50-year career, it's rare, and you hop on top of it. You see that you can spot the opportunity.
Yeah, I was watching that. Yeah. I was watching gold get higher than platinum, and I thought the market was going to correct, like it's been correcting recently. Yeah. But once I saw gold become more costly, then I knew the market, there was going to be a disruption, violent move. I'm in it for the long haul. I didn't bother getting out because I'm not that smart, and I'm not a trader. I don't have the temperament. But you're right. When you see platinum trading at a discount to gold, that market, something huge is going to happen to both of them. There's no question in my mind about it. You're 100% right. So
you use the method where, like you say, you buy on correction. You get a correction, you step up to the plate. If you have some extra money and gold's trading at a higher level, and you have some extra money, and it's just a better way to store your value. That's the issue there.
Exactly.
Rather than store it in paper dollars, I'd rather have precious metals.
For sure. And on that note, we got to move along. But Barry, give us your web addresses again.
Yeah, well, you can get quotes and information and read my my weekly market report and my daily blog at MintStateGold.com. Gold.com, which is a Stuppler and Company website. It's Mainstay Gold, and on there you can just hit the daily report. It's up there every day, and then every week I do a complete report on all the markets, and we get a lot of people that we have literally tens of thousands of people that come to the website and just want to read the reports. Plus, you can get access to the various prices of coins, the spot prices of gold and silver and platinum and palladium, as well as other information. So it's a very useful website just for the information. Is that if you don't want to trade.
Well, hopefully they will trade. I find it really useful, and your reports that you've written have really shown like a lot of research, a lot of depth that the consumer, the end user, doesn't usually get to see in this market. It's really specialized, and we thank you for that. And we'll have you on again in another couple months, and we'll see what the price of gold and silver has done by then.
All right. Thank you very much, Kerry.
Thank you.